Let's get to those top picks. Number one is Microsoft.
Yeah, this company obviously needs no introduction. It's the world's largest, by far, software company. It's actually the second largest company in the world, worth almost $2 trillion. Yeah, it's a doozy. So they operate across three segments: personal computing, business productivity, process improvement, and intelligent cloud. And what we like about it is really that it's a scale advantage, defensive growth company with great exposure to a few long-term secular infotech growth themes, notably digital transformation, cloud computing, business intelligence, analytics, collaboration. You know, and you just think about how many times we all touch their products every day.
Oh, yeah.
Corporate land, it's Azure. Personal landscape, it might be OneDrive, it might be a Surface tablet, it's Office 365, Microsoft Teams, video games, on and on and on. And the thing that they've done that's allowed the shares to re-rate upwards over the last decade or so is they've converted a lot of license revenue to recurring revenue model. And investors like recurring revenue. So about 70% of the revenue is recurring, and that's allowed for the re-rating. The shares have actually pulled back 40% from peak to trough this year and are rallying a little bit in the last couple of weeks. But it's a great entry point for what we think is going to be one of the largest companies in the world for a long time to come.
Royal Bank of Canada is your idea for Canadian banks?
Yeah, exactly. So we're going with the 800-pound gorillas here. This is the biggest company in Canada. And it's actually the seventh largest bank in the world. It's about to get a lot bigger with the pending acquisition of HSBC Canada, which is about a $12-13 billion deal scheduled to close in around a year's time. That's going to beef up their market share here in Canada, particularly in corporate and commercial banking, but should also offer them opportunity to cross-sell wealth management, private banking, and sort of international products for the HSBC core clientele, who in many cases have one foot in this continent and one foot on the other side of the world. So it's attractive demographics. And then apart from that, it's the dominant domestic personal and commercial banking franchise. It's the biggest wealth management player in the country. It's a top 10 global capital markets franchise. It's got smaller insurance and investor treasury services businesses. So it's well diversified by line of business, geographically, big presence in the States here, Europe, and elsewhere. 4% yield. The dividend grows at a high single-digit pace. You put the two together, and again, you've got a pretty good line of sight to low double-digit earnings growth over the course of a cycle. And that is the reason, in large measure, why the stock has outperformed the TSX in 19 of the last 25 years, which is a great batting average and why it's a core holding for us.
Finally, CVS Health.
So CVS is number 4 on the Fortune 500, so another one of these 800-pound gorillas.
In terms of market cap?
In terms of revenue.
Oh, revenue, I'm sorry, okay.
Yeah, no, it's not,
no, it's not market
we'd
cap.
love it if it got to that level.
Yeah, stupid question. Yeah, go on. Yeah,
so,
huge revenue, though.
Big revenue, yeah, $315 billion in revenue, in fact. So it used to be known as America's pharmacy. It's ubiquitous across the United States, 10,000 stores. But two transformational acquisitions in the last 15 years have really made it into a vertically integrated healthcare colossus. The first being Caremark, which is a pharmacy benefits manager, 2006 or 7, and the more recent being in 2017, 2018, Aetna health insurance, which brought them really upstream into health insurance and benefits management. They've got another deal on the table, which will take them into primary care, in-home and virtual care. It's an $8 billion pending transaction for Signify Health. That will add 10,000 medical practitioners, so doctors, nurse practitioners, to their roster. And just allow them to broaden out their healthcare offering even further. And Andrew, let's not forget, this is just a huge addressable market. Americans spend $3.8 trillion annually on healthcare, broadly defined. And that's growing at a fast clip because of aging demographics, morbidity, mortality, and so on, and escalation of drug prices. Lots and lots of reasons why that should continue to grow. Meanwhile, the stock yields 2.2%. It trades at 11 times earnings, discounted versus the 10-year average of 14. And the last thing I would note is this cycle really only started in earnest with the mid-2019 lows. Stock's up nicely, but in the past cycles for this stock, going back decades, last 6.25 years, and rallied its shares 438%. So we're just getting started, we think.
Let's leave it there, Brian. Thank you very much. Let's check in on the markets because we are seeing some pretty big selling. At one point today, the S&P 500 going down more than 2%. Let's get you an update. Yeah, it's down to almost 3% now. Looks like it's the double whammy of Jay Powell warning he's going to go on raising interest rates, and the European Central Bank boss, Christine Lagarde, saying exactly the same thing. It's a long game. Look for more rate increases. And that bank and the Bank of England both increasing borrowing costs today, also by 50 basis points, just like the Fed yesterday. And then we got these weak US sales, the biggest drop in a year. And that was a slowdown from October. This was for November. There was a drop of 0.6%. And it was a letdown from October when sales were up 1.3%. Thanks for watching Market Call. Christine Poole is up tomorrow.